In the second quarter of 2024, Warren Buffett's firm, Berkshire Hathaway, sold $75 billion worth of stocks, and most of it is from Apple stocks. Why did he do that? Is he preparing for the potential recession, or does he have any other strategy behind his move? Let's find out. The biggest reason Warren Buffett has sold his Apple stocks is the U.S. national debt. The U.S. national debt is a crisis that America has been facing for a long time, and the debt has increased to an unbelievable level of $35 trillion. We have explained in detail the U.S. national debt crisis in this video. Make sure you watch it. To just service this national debt, the U.S. government spent $726 billion in 2023. The total income of the U.S. government is around $4.5 trillion, and it spends around $6.2 trillion. So the U.S. government is borrowing $1.7 trillion every year. This is also known as a fiscal deficit of $1.7 trillion. As explained in this video, the income of the U.S. government comes from collecting different types of taxes. One of the taxes the U.S. government collects is a corporate tax, which is applied to all companies. Before, this tax was 52%, which was then reduced to 35%, and currently it is 21%, which is lower than its previous levels. At the moment, the U.S. government is collecting around $480 billion in corporate taxes. It is about 10% of the government's total income. As the U.S. national debt is rising by $1 trillion per 100 days, the pressure on the U.S. government to reduce the fiscal deficit is increasing. To reduce the fiscal deficit, the government can increase the taxes on citizens or increase the corporate tax from 21% to 30 to 35%. So even if the U.S. government increases it to 35%, then corporate tax collection will increase to around $750 billion. That will be a significant increase in the income of the U.S. government. So, according to Buffett, this was the best time to book profits. Their company will pay a lower tax on their gains. This was the reason why Warren Buffett sold $75 billion worth of stocks.
We don't mind paying taxes at Berkshire, and we are paying a 21% federal rate on the gains we're taking in Apple, and that rate was 35% not that long ago, and it's been 52% in the past when I've been operating. And the federal government owns a part of the earnings of the business we make. They don't own the assets, but they own a percentage of the earnings. And they can change that percentage any year, and the percentage that they've decreed currently is 21%, and I would say with the present fiscal policies, I think that something has to give, and I think that higher taxes are quite likely, and the government wants to take a greater share of your income or mine or Berkshire's, they can do it. And they may decide that someday they don't want the fiscal deficit to be this large because that has some important consequences, and they may not want to decrease spending a lot, and they may decide they'll take a larger percentage of what we earn, and we'll pay it. And we always hope at Berkshire to pay substantial federal income taxes. We think it's appropriate that a country that's been as...
After selling, Berkshire Hathaway holds $277 billion in cash. Now, whenever you come across this term, such as any company holding certain billions of dollars in cash, most of the time it doesn't mean actual cash. Usually, the money that is needed for day-to-day operations is in cash, and the extra surplus cash is invested in highly liquid investments such as U.S. Treasury bonds, where it can be quickly converted to real cash. If you look at the balance sheet of Berkshire, you cannot see this exact number of $277 billion. If you add these numbers, then you will get a total of $277 billion. You can also see that the majority of the cash is reinvested in buying the treasury bills of the US government, which means they lent $234 billion to the US government. Now, you might be wondering, why would he do that, right? It is because US Treasury bills are highly liquid and are in constant demand. So if Buffett needs cash, he can sell those Treasury bills anytime, as there are buyers who are always ready to buy them. If he doesn't sell, then he gets 5% interest on those bonds when they mature. So in both cases, Buffett wins. So basically, because of the rising US national debt, the US government might increase the corporate tax rate. Buffett kind of anticipated that the government might increase the tax rate, which would significantly reduce his profit. So Buffett sold his stakes in Apple and invested that money again in US national debt. Also, many people were thinking that Buffett sold 50% of their Apple stakes. That means there's some issue with Apple or its growth in the future. When Buffett sold his Apple holding, the Apple share dropped by 5%. Buffett started investing in Apple in 2016 and thinks that Apple is one of the best businesses for investment. Since then, they have accumulated 800 million shares of Apple, which were valued at $185 billion. Berkshire has sold 390 million shares so far. Even after selling, Apple is still the largest stock in Buffett's portfolio. His portfolio has 400 million shares of Apple, which are valued at around $90 billion, which makes up 32% of Buffett's portfolio of Apple stock. One of the crucial lessons from Buffett's management is that you also need to know the exit strategy of your investment. You cannot stick to one strategy and need to make an informed decision according to the market situation. If you want to learn more about the various investment strategies for maximum return, then subscribe to the channel and to our newsletter on our website. We send a weekly newsletter about various investment opportunities.